Hello and welcome to this video, and I'm going to be teaching you time frame analysis and how you can actually get trades on a daily basis at least. Okay, a lot of my students are not a lot of them, but some of them actually I noticed that whenever they make analysis, they use higher time frames so much that sometimes it takes them 3 days, 4 days to wait for an entry, and sometimes it even takes them more than a week before their entry gets mitigated. Now, that is not wrong, but if you call yourself a day trader, then you should be able to at least get trades every day or at least every 2 days. But going a week without seeing a setup, it's very rare for us day traders, especially when you trade like up to 3 or 4 pairs. At least you should get an entry, if not every day, okay, at least maybe 2 days in between and stuff like that. So basically, I'm going to be teaching you time frame analysis in this video, and I'm going to be showing you how you can actually navigate your time frames to get good entries. Okay, now this is gold, and I'm going to be starting from the daily time frame on gold, for instance. Now, when you look at gold on the daily time frame, all right, it gives you the overall bias of gold. You just see overall that gold has been buying. Now, one thing you want to take note of is that for every of these candlesticks that you're seeing here, it took 24 hours to form, which is 1 day. Okay, so for every of this candlestick, it took 24 hours to form. All right. Now, let's take for instance, you're analyzing on the daily time frame, and then maybe you say this is what a break of structure. Okay. You say this is a break of structure, and then this is another break of structure right here. Okay. And then because of this, you want gold to come down to maybe this other block right here. For let's take this for an instance. Okay. Now, this is the daily time frame. And before price get down to this other block, all right, before you now begin to look for maybe buy opportunities, this can take you like 3 4 days. And sometimes if the market consolidates, because gold can consolidate sometimes, if the market consolidates and the ranges, it might take you maybe 5 candlesticks, which is like 5 days. So at the end of the day, you most likely will have waited for a whole week. All right. But now, one thing you need to understand is that inside of this daily candlestick, okay, inside of this daily candlestick, when you go down to the 30 minutes time frame, you're gonna have a lot of candlesticks inside of it. Okay. Now let me show you something. Let's go down. Let's go back to the daily time frame on gold. Now this is gold on the daily time frame. Okay. Now let us take note of this. Let us use our vertical line to differentiate. Let us put this here. Okay, now this is 1 day and let's say a half day. Okay, because today's candlestick has not closed and the time is just maybe 12. Okay, it's just 1 p.m. right now. Okay, it's just 1 p.m. right now. Now let's go down to the 1 hour time frame, or yes, let's go down to the 1 hour time frame first. You're going to see a lot of candlesticks, okay, just between yesterday and today. Now this is the 1 hour time frame. Now every candlestick on this time frame, it took 1 hour to form. All right. Now, if you look inside of this, you're also going to see structure. You're also going to see bullish break of structures. You're also going to see what? Bullish break of structures. You're going to see a return to order block, bullish break of structures, and stuff like that. Now, if I should take this down to the 15 minutes time frame, you're going to see that you have enough chart data to be able to get trades. Now, this is what I need you to understand. Okay. You see that here we have what? We even have internal downtrends that occur at some certain points. Okay, we even have internal downward movements. Now, this is not for fancy. Okay, this is not for fancy. You need to understand how you can actually understand lower time frame movement so that you can use it to get trade entries. Okay, you need to understand and you need to practice and you need to get the point of correlating your higher time frame bias with your lower time frame entries. Okay, let me give you an instance now. Okay, or rather, let me give you a very, very lame explanation. Those patterns that you look out for on the higher time frame, look out for them on the lower time frame in the direction to where you think the market is heading on the higher time frame. I'm going to take that again. Those patterns you look out for, or those things you look out for on the higher time frame, okay, look out for them on the lower time frame in the direction of where you think price is going to be heading on the higher time frame. Let me explain what I mean. Now, on the daily time frame, we anticipated that gold was bullish and we anticipated that gold was going to do something like this. Okay? For instance, all right. All right. Now we had what? A break of structure on the daily time frame, if you remember. If you can't, you can rewind the video and then you go and see where we did that. And then we said that okay, we wanted gold to come back to what? To come back to this other block for an example. Okay. Now, now, if you check this chart, you're going to see that this thing has occurred a lot of times. Just this thing, this pattern, or this movement has occurred a lot of times. And let me show you. If I should zoom in now, I'm zooming in just for you to be able to understand very well. You notice that, look at here now. We have what? This is what? A break of structure. You see this, a break of structure, okay? Just like we had what? A break of structure here, all right? Now that is a break of structure. We have what? This is what? An order block here, all right? This is another block here, okay? Just like what? The other block that we illustrated here. And then what the price do? You see, price came back down, mitigated the other block and bought. So while somebody is waiting on a daily time frame, you that understands lower time frame movement, you've been able to catch a buy trade already here, and you'll have gotten your very very nice one is to what, if even if you took TP at this previous high, okay, you'll have gotten a very nice one is to 3.5 RR, extended that one is to 7 RR. You get the point. So understand that even if you check again, okay, price did what? Price broke structure here again. All right. Price broke structure here again. All right. It broke structure here again. And then what did it still do? It still came back to what? Order block again. Now you see that you've gotten two trades in between the space of how many hours? Maybe 3 hours. Okay. If this occurred at 7:45, this occurred at what? Okay, 13. That is maybe between the space of 4 hours. You've gotten two trades. Now, this gave you how many RR? This gave up to 1 is to 5. 1 is to 5 risk to reward. So while somebody on the daily time frame or on the 4 hour time frame is waiting for price to sell, not like it's wrong, okay? Okay, depending on your trading style, like I always tell you, not like it's wrong. But while somebody on the 4 hour or daily time frame is expecting price to sell down to this zone here, you've gotten two trades and the market is still buying. So what do? You simply look for those patterns that you want to see on the higher time frame. You look for them on the smaller time frame and you trade them in the direction of where price is going to go or where price is headed on the higher time frame. What I mean is that if on the daily time frame or on the 4 hour time frame you expect that the directional bias is bullish, then when you go down to the lower time frame, look for entries in that direction. Look for entries in the bullish direction, just like you anticipate on the higher time frame. Okay, you can add your knowledge of liquidity, add your knowledge of every market structure and the rest, but you must learn how to navigate lower time frame structure. Sometimes the price action might be very noisy. Okay, the price action might be very noisy. For instance, now, okay, for instance, after all this movement occurred here, we can see that price left trend line liquidity. Okay, we can see that price left trend line liquidity just here, just here also. Trend line liquidity was spotted, and then price sold. Okay, price sold. Now, a swing trader or one trader somewhere might be waiting for price to sell to this other block, or maybe even here. That is absolutely fine. Maybe the person is a swing trader, but as a day trader, I should be able to know how to maximize this movement with smaller time frames. Now, when you navigate down to the 15 minutes time frame, you can already see that we have a demand level here in accordance with what? With my trend line here. So liquidity grabbed, demand mitigated, trend line confluence, and I'm currently on the buy on this trade. And so far so good. You can see that this trade has moved almost 1 is to 3, and that is good. 1 is to 3, 1 is to 3.4 already. That is a good one already. So I can decide to even close and I'm like, okay, I'm done for the day. I've gotten 1 is to 3. Meanwhile, a swing trader is already waiting. Waiting, he might wait for the next 2 days maybe. Or he might not actually never get mitigated because gold might just even buy. But if gold eventually is going to sell, then it might take like maybe the whole of today or maybe the whole of tomorrow also. And you see that a day trader now that does not understand how to navigate lower time frame structures might never get an entry anytime soon. Now let us check another end. Let us check another trade. Let's check maybe let's check GBP USD. That's GU. All right. GBP USD. Um, all right, very good. Now on GU, we have something really amazing also on GU. Okay, let's start from the daily time frame and then let me explain. And I think that will be all for the video. Okay. Now on GU, okay, on GU, if you look from GU now, you're gonna see that all right, price is selling. We have what? We have this supply here, fine and good. Okay. Now, price has even tapped into the supply, and maybe some traders are already selling. Maybe, okay, maybe some traders are already going short on GU. Who knows? I trust there are people that are going to be selling GU from there and maybe targeting here, blah, 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 and the rest. Now, is that wrong? I'm not saying that is a wrong bias, but then as a day trader, okay, as a day trader, you can use your 15 minutes to 1 hour, that is I mean 15 minutes, 30 minutes and 1 hour time frame to be able to trade in between. You go in and out, in and out, in and out. Now, not like you're scalping aggressively, but you're a day trader, so you can get trades you can hold for maybe a couple hours and then you close for the day and you are good. All right, now let me show you something that happened on GU. All right, now I opened my 15 minutes time frame, okay, and then I saw this setup. Okay, first of all, this sell, okay, as a day trader basically, and as somebody who I refine my entries a lot. My strategy demands that I do that, or my strategy enables me to do that. I refine my entries. Okay. Now you're gonna see that selling from here is not entirely wise for me because I'm going to have a very tight stop loss. A very wide stop loss rather. Okay. And personally, I do not like to trade with wide stop losses. So I break down this structure, and that is another benefit of understanding lower time frame movement because you'll be able to refine the charts. Okay. So now zooming into this place here, you can see something already. If you take a good look at this structure over here, you would see that you would see that here we have what? A structural liquidity, okay? And then somewhere around here, we can see we have what? An inducement or a quasimodo, whatever you want to call it. All right, whatever you want to call it, but there's a point of interest over there. Now, if you look, you see that above this point, we have what? Liquidity. So it's going to be a lot wiser for me to, or a lot better for me to refine my entry in this way. And this is how you even get sniper entry sometimes. You can refine your entry in this way. Stop loss will be here. Okay, just for instance, let's assume we are taking a sell. I'm going to refine my entry here. Stop loss will be way above here. And then my TP can be anywhere I want to be. Maybe here will even be a good one because, oh, sorry for that. Because I'm going to be getting like maybe 1:5 already. 1:5 already. And this is what? Oh my God, this is really, really wide. 1:5 already. Okay, you can see it. Now, that is how you can refine your trades when you are able to navigate down to smaller time frames. All right. But now I was explaining something earlier on how to get trades every day at least. It's still about being able to understand smaller time frame movements. Okay. Now, while somebody is waiting for the sell, do you know that I will have gotten a buy? How? Analyze smaller time frames because somebody from the 4 hour time frame, okay, is looking out for a sell and he most likely might not even see any reason to buy. But when you're able to navigate down to smaller time frame, 15 minutes time frame, you're going to see a structure that permits you to buy for a while at least. Okay, you can catch a quick 1:3, 1:4 RR here. Now, what is that setup? You see here we have what? Buy side liquidity taking. Okay, buy side liquidity taking. We have sell side liquidity taking over here also. All right. Sell side liquidity taking. Oh my God, what's this? Sell side liquidity taking here also. And then you have what? You have this other block beneath. Okay. You have this other block beneath it. All right. Now, how do you take these entries now? You see, sell side liquidity grabbed, mitigation of this other block over here. Okay. Stop loss at few pips below this point. And then you can see that at this point already, you've hit 1:4 RR already. So while somebody's waiting for a sell, you've already gotten a buy. This is how you do it. If you apply this strategy or this approach on gold, you're going to be milking gold, because sometimes swing trading gold can be stressful if you don't really know what you are doing. But if you're able to approach it in this manner, you'll find it a lot easier and a lot more profitable. You just need to know what you are doing. All right. So, guys, that will be all for this video, and I believe you got value. If this is your first time on my YouTube channel, do well to give me a subscribe, give me a like, and please drop a comment on this video. And you can also share to your trader friends and help their lives also. All right. Now, explaining this also, okay, I just saw something right before I give you the closure, or I end the video. You see that, okay, we even have a setup here. What is this? This is what? This is liquidity here. You see? This is liquidity here. All right. We have what? We have a left shoulder over here. A left shoulder over here. All right. A left shoulder over here. And we have a buy opportunity. This is a buy opportunity here. So you see that this one is even a trade. If not for the class, if not for the video I'm recording, I most likely will have gotten this buy. But I guess I missed it because of the video I'm recording currently. You get. So you see, liquidity, you have what? Break of structure right here. Sell side grabbed, price moved, form liquidity, price came back, grab liquidity, mitigated this point of interest, and he bought. Now, currently, as I speak to you, it's currently at what? 1:3 RR already. So you see that even as I'm teaching, it's still playing out, it's still working. You just need to understand that concept. All right, so that will be all for now. Okay, you can join my Telegram channel where I post my free chart analysis. All right, and then if you are looking to further your learning in forex, you want to get a very good working strategy, and want to really understand what I teach and how I trade, you can join the mentorship. Send me a DM on WhatsApp, and I'm going to send you all the details you need to know, or you can visit www.westdemi.com and you're gonna have it. All right, so until I see you in my next video, do well to drop a subscribe again, send me a message on WhatsApp, and stay connected with me, and I'll see you in my next video. Happy learning, happy trading. Is your favorite trader, King Wesley, and I am signing out.